This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Morning, everybody. It's Thursday, January 29th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at March corn up a penny and 3/4 at 431 3/4. March soybeans were up 5.5 at 1080.5, and March Chicago wheat was up 5 at 541. This morning we got weekly export sales, lower end of the range for corn, 1,648,900. On the soybean side, disappointing as well, towards the lower end of what they were estimating, 819,000. On the wheat side, 558,200. That was solid, upper end of the range. Meal was also good, 464,300, and solid oil sales, 22,100. Upper end of the range is looking for a number close to 26. We were talking before the show here, guys, bumping up into some key technical areas here for corn and beans in the front months. Certainly the precious metals and some of the outside markets continue to be wild. Silver margins increased again here this morning, up close to 12% of the notional value of the contract. So it's getting pretty wild, continues to be wild, I should say. But Dustin, maybe share a few thoughts here this morning, and then we'll throw around the room.
Yeah, thanks, Dan. Yeah, I mean, certainly we've been talking about the currencies a lot and dollar-denominated assets. You know, traditionally gold is kind of the hard asset that's viewed as a metric of purchasing power. But you'll get bouts in time where gold and silver have these like just parabolic moves. Like, I think 2011 was the last one, and it didn't last. But it doesn't mean that that this one is going to be the same, right? There's a lot of reasons behind this, and I think what I'm relating it to is, just the value of dollar-denominated assets and a lot of the policy that's going around this. We've had a really loose fiscal policy, and we appear to be moving into a very loose monetary policy, where just the currency is not worth as much, and it's happening around the world. So I got a couple of charts. One is just gold. I'm sure a lot of people, we've talked about this ad nauseum. A lot of people know what's happening here, but just put it into context of where we were just back in 2024, right? $2,000 an ounce. We're at $5,300 to $5,500 an ounce overnight. This is actually an old chart from yesterday's letter. And what does that mean for grains? It's not quite evident. Like we've seen, some correlation in the past, but when we relate the number of bushels to buy 1 ounce of gold, if we go to the next chart, Jack, now we're talking about just like this really crazy number, 1,233 bushels of corn just to buy 1 ounce of gold. That was surpassed only in 2020 when we had, COVID panic. We were going into that loose monetary and fiscal policy again, and gold was catching a bid, but corn was near the lows out of fear of lack of usage. Now we're at a huge multiple of that number. So it's hard to tell what's going to happen from this whole thing. I mean, the spillover, you still think about this chart is just simply a representation of two assets not related to dollars, right? Just related to each other. 1,233 bushels of corn to buy 1 ounce of gold. So I do think that's something we have to really be careful of for commodities. If this just flips a switch on funds and they want to start being long the whole commodity sector, that could maybe change things in the next couple of months.
That's a good point. And crude's up, 5% here this morning again. So we're catching a bid there. So it does, Justin, you've talked about it a number of times that, there doesn't even have to be a planting fundamental type of reason for these markets to turn up, but we're getting some help, if you could call it that.
Yeah, I mean, this is a once in a generation type move that we're seeing in precious metals right now. So you're in uncharted territory, really. I mean, outside of the Hunt Brothers squeeze, of silver in the 80s, I mean, we've never seen anything like this. So it's hard to know what it means. But to Dustin's point, I mean, no matter how you look at it, it makes grains, cotton, anything like we talked about in the office the other day, anything you grow looks just ridiculously cheap. Now we do have surpluses of a lot of these things, right? So we do have, I mean, the supply and demand still does matter, but when you start looking at just the value of it, that's why I get more convinced that, the flat price might be undervalued, but it could be, spreads could get super wide because you still do have a surplus, but that doesn't mean the flat price is right. So yeah, I just keep, we're all trying to figure it out here. It's a really challenging time when you're under cost of production going on a few years in a row. You've got an abundance. You've got stubborn inflation on the input side. Interest rates that are stubborn to go down from here, it seems like what does it all mean? And at the same time, you've got all these inflationary things, due to currency. How does it all play out? So I think it's going to be an interesting year, to say the least. I think your biggest risk, in my opinion, is between now and March 15th, personally. And then, not to say that we can't go grow another big crop and have a bunch of risk after that, but I think that's going to be the toughest time as we get into people having to pay for cash rents. Cash is going to be needed. So I think it's going to be really interesting with all these different, push and pulls going on in the macro environment.
Well, Ben, what's on your mind this morning?
Yeah, I think it's a good conversation. You have to separate the reality from what you want. Sometimes you can get hooked on a narrative and it can be costly. What I want is to see people find the value in corn and drive it higher and make this a more manageable situation for the American farmer. The reality is until things show more, this is probably back in fill. It is interesting to note open interest has been up almost every day in corn since the report. When you look at, Justin alluded to surpluses, and I think that's what we have to overcome. And I still think we have to deal with the last half of February. And until something changes here, I'm going to still view it as back and fill and hope that what I really want comes true, because I think that would be a lot more fun, a lot more volatile. And it could potentially happen. It just isn't going to happen in the time frame that it can make a difference.
Yeah, Ben, just to add to that, I think you make a good point. It's not like nobody's talking about it. It's not like, hey, none of these guys have looked at how cheap grains are compared to silver. Like they're all looking at it. And there's people for sure buying it because of that.
Yeah. And let's look at what we've done over the last, let's call it week, right? The dollar's down probably 2+ points. We had a record export week. I think the best one in 25 years or something like that. Maybe there was one weekend 21 that was better. Gold and silver exploded. Crude oil's rallied almost $5, and we've managed to eke out about 8 cents from where we started. So you kind of look at that and you go, I'm really disappointed with the action, considering the really supportive news that we received in the last week. Now, the exports were probably kind of a buildup from some slow holiday weeks, and we saw them moderate today. But those are pretty dynamic moves in other markets to have such a minimal effect on corn. I know what I would like to see, and I'm going to frame that as it's going to have to show it to me before I'm a full believer.
Yeah, because you can look at it as look at how many bushels it takes, to buy an ounce of gold. And you could also look at it as if we didn't have these moves in these outside markets, what would the price of corn be?
Mm.
Yeah.
Thank goodness the dollar's falling and the other markets are supportive.
Yeah. Well, and you ultimately you would have to overcome the fundamental of what we see on paper. You would have to have a tremendous amount of buying, I think, to have a let's call it a move back to the spring price in the front end from last year, 470. Tremendous amount of buying. And, is it out there without a story? I think if there's a story, we may be shocked someday at how much money and contracts flow into grains when there's a story. But I don't think there's a great story today. Global corn stock's pretty tight. US has plenty to supply everyone with right now, it feels like. So I'm just back in fill. We start closing above 45, 46 and show some strength there. I think you have to give it some room.
So the last time we saw this, just kind of talking big picture, my mind was 07, 08, when we saw just a general commodity boom, right? We saw super wide spreads because we did have enough, currently we had enough supplies of everything, but the amount of dollars came in that, the dollar was in the low 80s. We're at 5, 96 right now. Mm-hmm. So, I mean, by no means is the dollar cheap. It's come down a lot in recently, but if it decides that, whatever it is, but if it decides to really devalue, there's a long ways to go in it. So if we started getting into called sub 90, then I think that flips a trigger to just buy anything dollar based. So I think we're still a long ways from that. It's had a recent move. Like if that were to happen, I don't know what gold and silver would do. But certainly I think our markets would just have to revalue, I think, the flat price just based on the dollar. So it's definitely something to watch. And I just, I remember 08 very well, just because it flipped the trigger and it went on for a year. It didn't matter. There was just money chasing anything. It was a dollar trade, really. So.
Very good. Got a couple of minutes here, Ryland. Let's talk about livestock for a second here. Fats kind of inching back towards the top end of the range, the 3-week trading range, which was good to see. Hogs took a little bit of a break. What are your thoughts here before we start the day?
Yeah, no, we saw everything kind of fell to start and then just climbed right back. Looks like Packers started posting bids in the north, 236. We did see a little bit of trade in the south, right around 234. So just in general, cash news still kind of hanging on really well, I would say. And yeah, we got April up to within a nickel of kind of multi-month highs here. So still seems like just in general, the market's staying pretty kind of cautious into this supply report. Just everything looks like it's kind of steadying out. And we have the inventory report tomorrow at 2:00. So I think just overall, I think this will be kind of the determining factor that sets a little bit of a narrative, over the next 6 months. So all cattle and calves expected at 99.7. The beef cow inventory is expected to be up just 0.4%, and replacement heifers 101.7. So I think that in general, it's expected to show just the early signs of herd expansion here. And, obviously there's going to be kind of that heavier weight, I think, on the back end of the market. And even though the structure, the pricing of the contract just going all the way out, is into kind of late this year, it does kind of feel like you've baked a lot of that sentiment in, but we just don't know exactly how the flat price is going to react to this, and if it's just going to be kind of near term hold up, or if it's going to be kind of this bull spread forever kind of situation. So we'll see how that shakes up tomorrow. On the hog side of things, finally had a little bit of a setback. It was a little bit of a gap lower. Open interest still increased 5 1/4, and overall, I mean, like, this thing was just overbought. Like, it was just, I think we've been warning about a correction for days and days, and it finally just kind of happened. But on the other hand, cash markets are still really firm here. Cash held up $1.46 yesterday, so I think that's kind of the saving grace for now. But obviously, technically, still overbought. Still could see a correction back down to the 20-day, I think, pretty easily. You close below the 10-day, so just kind of feel like there's a little bit of a weaker tone here. But ultimately, cash market should probably end up helping those support levels hold for now.
Very good, Ryland. I thought it was interesting. We met with a large bank yesterday, you and I, and it feels like the cattle lender is starting to get a little squeamish given margins and the way all markets are acting. I thought that was a pretty interesting conversation that we had yesterday.
Absolutely. I mean, like, obviously everyone is worried. Every single person in the cattle industry is worried because the timeline is just very long, and the drops that the market can make suddenly and sharply just, it humbles everybody. You know, and a lot of it is just out of everybody's control. There's a lot. I mean, obviously the border is a big X factor that I don't think anybody really knows how to quantify, just because it shakes up so many markets here. And then on the other hand, you've got record high prices on the table. There's just a lot of risk. When the cattle market decides it's expanding and it's done, this can get pretty dangerous from a risk standpoint. So we've just been preaching, just, you know, have something here. Just make sure that you're protecting some margin. You don't have to outguess anything. You don't have to be right. You just have to kind of hope that you stay profitable with some of the marketing decisions that you make. And, you know, yeah, I could see it. It's not just banks. It's anybody that's got cattle, you know, and have done this for a long time, kind of knows how easy it is to get just caught, you know, without anything on underneath. So just a recommendation at this point.
Very good. Appreciate the update there. Just came into the open. We got March corn up 3.5 now, 433.5. Soybeans, March soybeans are up 8.25 at 1083.5. And March Chicago wheat's up 7.5 now at 543.5. Tomorrow's Friday. We'll be out with Fun Fact Friday. Be sure to tune in. I never know what you're going to get there. It's usually a fun way to go into the weekend. Also, we've talked about it quite a bit here, but the new War Room report gives you access to premium content. That's especially important as we come into crop insurance season. We're going to be sharing with you some different ideas, and so be sure to check that out. Also, 10% of those subscriptions will go to support the AgYield Next Gen Foundation, supporting the next generation of ag leaders. So very good foundation there. Be sure to check that out. If you wouldn't mind, throw us a like and certainly subscribe. We appreciate everybody that tunes in on a daily basis. We're doing this every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. I appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we'll talk to you again tomorrow.
The War Room is presented by AgYield, a risk management partner of American grain farmers for over 50 years. Looking for more in-depth analysis? Check out the War Room Report. Our team's knowledge and expertise delivered straight to your inbox every weekday. Each report delivers key market-moving headlines, critical weather updates, USDA report breakdowns, and exclusive video content. All for $50 a month. And most importantly, 10% of every subscription will go directly to support the AgYield Next Gen Foundation, a nonprofit investing in agricultural education and the future of farming. To sign up for the War Room Report, check out the link in the description or learn more at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.